On the podcast with us today is Antoine Martel. Antoine, welcome to the podcast.
Yeah, thanks so much for having me.
Well, I want you to get us started, Antoine, because I know a little bit more about you than most people on here do, because I interviewed you and we first met on our other podcast that my wife and I do called Tough Decisions for Entrepreneurs. And so I thank you for coming on that one, but also looking forward into diving into this particular asset that we're going to be looking at, which is Monroe Apartments in Memphis, Tennessee, which is a 20-unit asset. So before we dive into that, though, give the listeners a little bit of a background about who you are.
Sure. So again, my name is Antoine Martel. Been a real estate investor for the past 4 years. Really got into the business in college. I didn't want to graduate college and go work for somebody else. I wanted to graduate college, but I didn't want to go and work for somebody else after graduation. So while I was in university, I kept researching real estate investing. And my dream was really to flip houses in LA because that's where I was in school. But after placing a bunch of offers, I realized it was way too expensive and way too difficult to invest here with little amount of money. Started looking out of state and started buying properties and building a portfolio of rental properties just using the BRRRR method out of state. And then built up a portfolio, started then selling properties out of that portfolio, which then started a turnkey business, which is now what I do full time. And that, business, we buy, renovate, and sell 100 homes a year. And kind of with that business over the last couple of years, started looking at using that cash and that capital that business was generating to actually invest in multifamily, do stuff a little bit bigger. And that's what led us to this 20-unit apartment building. So before this 20-unit building, the biggest building I bought was a 4-unit apartment building in St. Louis, but then we realized it was either go big or go home. And this deal hit our lap. It was in a neighborhood, in an area of Memphis that I really like, that I think is a B-class area with lots of potential. So when it hit my desk, I knew that it was the right thing to move forward. We had the cash available, and we decided to move forward on it, and we closed back in December.
Well, I want you to kind of give a little bit of the backstory about this asset too, because I know we talked a little bit about how, you had to convince your parents or something like that to be able to, invest in this one, because they own this one, I believe, outright, correct? Not outright, but they own the mortgage and the debt and all that kind of stuff on this one. They were the only investor in it, right?
Yeah, my parents were. They actually sold their house in the Bay Area and used that cash too was used to help to buy this apartment building, and they bought it themselves. So no other investors, no money was raised. It was kind of just the gains from selling that property. Some cash from the business was used to buy that asset. So how it came about, the way that I've been looking for my multifamily deals, I literally went on Zillow, pulled every Zillow agent on LoopNet, and I pulled every single agent on LoopNet in the multifamily space, got their name, phone number, email, and then just started emailing and calling them every 2 weeks. Would tell them, hey, my name's Antoine Martel, real estate investor looking for B or C class apartment buildings in these neighborhoods. And just every 2 weeks for like 9 months, I did that and just kept on being very repetitive with it, changing up my pitch a little bit to show them that I was legit and that I had cash in the bank and that I was going to be able to close. And then eventually I emailed somebody on a Thursday night or Thursday, and then they replied back, hey, yeah, I actually just met with a seller today about a property that fits this criteria specifically. And I'll send you the details in the morning. Sent me a rough little email with 5 lines of text, which was, 20 units, 1 bedroom, 1 bath, new roof. These are the rents, these are the expenses. And they were like, you have to submit an LOI in order to get the full financials. And I was like, okay, well, I'm kind of stuck in a corner. And then that's what forced us to we just made an LOI for $1 million, and we countered back and forth until we got we actually closed on it for $985. But yeah, that's after we saw the full financial picture, then we were able to make a really clear decision on what price it should be.
So I want to talk a little bit about those emails that you were sending, because it's definitely a unique approach. Obviously it's not unique in that, people call brokers, but to have that consistent follow-up with them. So obviously I can understand kind of like that initial email saying, hey, I'm Antoine Martel. This is what I do. This is what I'm looking for. But every 2 weeks, what else would you be sending them?
So for example, like my parents sold their home in August. So then the email pitch would change for the month of August moving forward to where, hey, I actually got a huge sum of cash. I just sold a big asset, right? and, here's a proof of funds to show you that I have the money, or just like a screenshot of the balance to know that I wasn't just messing around, that I actually wanted to, buy a property and I had the cash and I needed to get rid of it fast. So doing stuff like that. I also like refinanced the 4-unit apartment building, pulled my money out of that. So that was an extra $250,000 that I pulled out of there. Right. And then in those couple email pitches after that, I would kind of tell them, hey, I also just did a cash out refinance on a 4-unit building. So kind of giving them a little bit of backstory as to why I had money and why I had the cash and why I was going to be able to close. But I mean, other than that, it was really just my criteria and what I was looking for in an apartment building. And then a little kicker on, where's the cash coming from? Why do I want something so urgently, et cetera.
Sure. So how old are you, Antoine, if you don't mind me asking?
I turned 24 yesterday.
That's awesome. I wish at 24, I was doing what you are doing right now. So, I know we kind of talked about this on the podcast that we did earlier this week or actually I think it was last week that we did one on the Tough Decisions podcast. But share with the listeners of how you were able to, because this is the question I asked last time, was how are you able to convince your parents to invest that kind of money in an asset like that?
Yep. Yeah. No. Great question. And my answer whenever I get asked that question is always just I was keeping them in the loop every single week as to what I was doing, right? Because even when I first started while I was in college, I knew I wasn't going to have the money. I mean, I had $5,000 in the bank account. I needed 50 or $100,000 to even get some momentum going, right? And I knew that my dad had been in the stock market, had a 401k, had some money saved up, but just didn't have the time because he was an employee. He was working and making somebody else rich, but he had some money in the bank account. He wanted to invest it, wanted to make money with it, but just didn't have the time or the energy to do so after working from 9 a.m. to 7 p.m. Right. So, it was just really hard for him to get started, and, he had to pay the bills, and to live in the Bay Area, that means working 24/7. So, really keeping him in the loop as to what was going on and all the pivot changes in my mentality of, investing in real estate. So first we started trying to flip houses in LA. We tried that for 6 months, made 20 offers a month, and just kept him in the loop as to what was working and what wasn't working, and, what kind of returns he would be able to see on his money, or if we were to raise money, what kind of returns they would see. And then slowly transitioning into, okay, fix and flip is not going to work for us here. How about out of state? What are those deals going to work? Hey, I met this guy at a networking event, or I met this guy for coffee. This is what I learned. And then kind of just educating him through those phone calls, instead of just coming to him and, studying for 2 years and then going and having a dinner with my dad and telling him the whole thing in an hour. Right. And so he really knew that I thought through every single step and every single process, so that when I did go and ask him for the money, or for the investment for this certain project, then he knows that this is the right, the natural progression of how we were coming up with why this choice, right? So it just made my pitch a little bit easier, because it was educating him, because he just didn't have the time to go through and do all the BS to get to the final answer. So that when I did go and ask him for it, it was like a no-brainer. It was like, okay, great. Finally, we found what we were looking for. Let's do it. And then same thing with the apartment building. That was kind of for the first investment. But I mean, similar thing with the apartment building. I mean, 9 months of analyzing apartment building deals. Every time I would get a deal, I would run the numbers. We would talk on the phone for 30 minutes or an hour, and I would walk him through the numbers and why it worked or why it didn't work, so that after we looked at 100 deals together, then the one deal that made sense, okay, it was a very easy sale, because he had seen, and he was willing to put all his money into it, because he had seen the 100 deals before. And now he, just through educating him and my mom kind of on what to look for in terms of the deals, made it easy. But, if a listener doesn't have a parent like that, I mean, it could just be literally with your investors too, or people who do have money who you want to be investors, keeping them informed on a weekly or bi-weekly basis, even if it's nothing important. It's just like, hey, here's a deal I looked at, and this is why the numbers don't work, but I'll keep you guys posted. As it just keeps makes people know that you're still trying and you're still working and that you're working hard and you're going to take care of their money and put it in the best spot that you think is going to work well.
That's exactly what I was getting ready to touch on is that what you did with your parents is exactly what everybody should be doing with any investor at all. Making sure that they start that communication now. Don't wait to look for your investors when you have a deal. Start courting your investors now and talking to them about, why you do a deal or why you don't do a deal and all the different processes you're going through as far as education or, different, educating them at the same time. And that way, when there is a deal, like you said, they'll be ready to write that check or wire those funds because they know you. And that's one of the biggest things I talk about too, is the Investor Triad, which is, investors will only invest with you if they know, like, and trust you. And the most important thing, I believe, is actually know, because they can't ever get an opportunity to like or trust you if they don't know you, right? You have to make sure that they know you, and then you can start that process of educating them where they build that like and trust with you. But not only do they have to like and trust you, they have to also know, like, and trust the deal. So you have to talk to them and educate them about why you're finding these types of deals. So when you find one, they know, like, and trust that deal. And then along that entire process, you're also getting them to know, like, and trust you in the deal. And so there's these three different components when you're talking about investor relations that are very important, and you hit on all three of them.
Yep. Yeah, no, I completely agree. And that's what I do. I have a lot of investors who invest in my single family side to help us, when we run out of money, then, there's more deals to be had. Then we keep those people in the loop too. And they keep on, we send them, 3 deals that we're looking for money on, and they'll choose one. We walk them through all 3, and then they get to decide, but yeah, keeping them informed. And that's why even for our, like, the turnkey buyers that come and buy our properties from our business, we send them every week material just about the neighborhoods and the cities we're investing in. So yeah, educating first too makes that sale way harder, whether it's you're selling them a product or raising money, but just educating first without asking anything and then showing the product second makes it a much easier buy for that investor or that client.
So on this 20-unit asset here in Memphis, Tennessee, I say here, I'm not located, but I'm actually in Columbia, South Carolina, and you're probably in the Bay Area too, right?
I'm in Los Angeles. Yep.
Los Angeles. Okay. Your parents are still in the Bay Area?
Yeah, they are.
Okay.
Yeah, for now.
For now. One of these days they'll maybe move to Memphis, Tennessee. Who knows?
Yeah. Or somewhere cheaper.
Yeah. So going back to this property, at what point did you actually go and tour this asset?
Yeah, great question. So remember, we had to put it under contract first to get anything, right? And then I just gave myself a ton of time. So I'd had like 45 due diligence, 45 days of due diligence, 45 days to close after. So I had 90 days total, which was, to me, was plenty of time. And put it under contract. We, went back and forth on the price. I, again, didn't have any financial material. So it was kind of just, sure, like, this price works based on the, 3 lines of text you gave me, but I need to know much more in order for this to actually be a good deal. So put it under contract for $1 million. Then I also, in the contract, which I'm not sure if this is normal, but I also wrote in the contract that due diligence does not begin until I receive all financial material. So it took them like 2 weeks to even get me that material, which then gave me more time. And they were sending it kind of one by one too. So it kind of gave me more time to, like, consistently go and also talk to the lender as well. So, hey, lender, I have this deal under contract. It bought me a little bit more time that I did need. It bought me that extra 2-week window so I can book my flights, make sure that all the financials matched up, talk to the lender, see what the lender's LTV and max loan amount are going to be. So once I got all the financials, then I was able to book that flight and go and visit the property. And then that's when I scheduled all my inspections, all the walkthroughs of all the units, and then also had my contractor and myself. So I was there for like 3 or 4 days and kind of just scheduled that 2 weeks out in that due diligence period. But, that little 2-week window helped me buy some time as well.
So on this asset, you ended up purchasing it for $985,000. How much earnest money deposit did you have to put in?
I think it was $10,000.
And when did that go hard?
That went hard the 45 days in.
Okay.
Yep.
Well, it's nice to have that flexibility. Go ahead and find the price, put it under contract, and then have those contingencies in place that if in that 45 days due diligence you wanted to back out, you could. That's always nice to
Yep.
have that flexibility.
Yep. Absolutely. Yeah.
Now,
And
go ahead.
well, and also like while we were doing the due diligence as well, then we collected all the bids. And then before the due diligence was up, before that 45 day, let's say on day 40, I went to the sellers and said, hey, there's a little bit more work that needs to be done. I asked for like $70,000 to decrease the price. And they said, no, we'll give you $20,000. And me and my dad looked at each other. We're like, are we going to really pass on the deal for, $50,000? It's like, no. And in terms of this deal, it's going to reduce our returns by 0.5%. It's fine. Let's just get it done and do the deal. So that's why it went from $1 million to $980,000. We were able to get a $20,000 price reduction, but yeah.
So I'm assuming that because it was through that broker off market, you probably were not competing with other bids.
No, we were actually the first person to see it and the first one to make an offer because I did it so quickly too. So called him on a Thursday, Friday morning, I got all the information, right? And then by lunch, I had submitted an LOI just so I can get the financials. Really, it was not much more that I could look at. I already knew the area, knew the neighborhood, and knew what was around it. So it was really just based on the financials of the building.
So what kind of things came up throughout the process during the due diligence?
Yeah. So a lot of things. So God, I mean, so
what's the age of this asset?
1964.
Okay.
So it's an older building. Half of the units. So it's like 10 units on the second floor, 10 units on the bottom floor. The 10 units on the bottom floor needed like $7,000 of work each. The units on the top floor needed probably about half of that because they had new flooring and new cabinets and all that kind of stuff. So that's just the interior repairs. When we did the inspections, we had, all of the major systems checked. So electrical, plumbing were both good, which has saved us a lot of money. If those were bad in those older buildings, it can be very expensive to change all the electrical or all the plumbing. We checked all the HVAC units, all the hot water tanks. All of them were good and good working order. So that was great. The major expenses were really on the exterior. So there was walkways going up to the second story, and there was even a Y shape. So one staircase going up, and then it splits off and goes into both sides. It was like a U-shaped building. So with that whole thing needed to be replaced, which I didn't account for. It was completely rusted out. It was hanging by like 1/2 inch of metal.
Wow.
And there was 4 posts holding that thing up, and 2 of those posts were swaying back and forth. They weren't even in the concrete. So that just kind of tells you the kind of exterior, the guy just didn't treat the exterior very well. He was mostly focused on just renovating the interior of the units because he thought he can get higher rent if he made the units nicer. But he didn't realize that people don't want to walk up a very scary walkway to get to their unit. Doesn't matter how much they're paying. They're not gonna risk their life, or it doesn't matter if there's golden nuggets or golden bars in the units. People are going to be very scared to walk up that walkway to get into their unit. So he didn't really make it a community. So that was the biggest thing. That just replacing that one staircase cost like $10,000, which I wasn't expecting. And then underneath all of the walkways, there was this tin that was rusted out and crumbling and stuff like that. So it didn't look very good, and it was pretty costly to replace it. So that as well was a surprise to us. So really all of that iron work that needed to be handled was all a surprise to us, and we had to get bids for all of that stuff. All the handrails were not up to code. So literally everything iron related needed to be handled. And that was really the biggest expense. And then collected bids from a bunch of different contractors and put them on a spreadsheet and then sent them to the listing agent, who actually double-sided this deal, which I think may have helped us a little bit too on, when we placed the offer as well.
So what was the total CapEx budget on this one?
We had $150.
And how long are you guys planning on holding on to this one?
Forever, I think.
Okay, so it'll be a legacy asset.
Yeah, a legacy asset. Because the reason why I say that too is because the neighborhood is kind of in a transitional area. So it's in Midtown Memphis. So if anybody knows Memphis, it's, B class, up and coming, a couple of like hipster neighborhoods. Young families are going there and buying $2,000 or $3,000 homes that are very nice. And there's a bunch of local coffee shops and a bunch of places to hang out, bars, restaurants that are all really good. So it's in between all of that like hipster gentrification area and then also the whole hospital and downtown core. So tons of good jobs mixed with a great neighborhood and great places to hang out. And our building's kind of right in the middle of it. So I'm thinking that over time, kind of it overlaps. And we're kind of on the fringe between both of those really good neighborhoods. And then just the more research I do about the area and look at the new developments coming, the more and more I think that we should hold it long term. Like there's even just like one block away, there was an old store or something that got torn down. Now they're building a brand new Starbucks. If that gives you any idea of, the kind of renovation and stuff that's changing in the neighborhood.
So one of the things I wanted to touch on as well, you mentioned lighting, because that can be expensive to kind of replace and stuff like that. Have you considered contacting the power company to see if they can do that for you for free?
Oh, wow. No, I've never thought about that.
Yeah, we actually just had, we have a complex right now. It's a 130 unit one in Greenville, South Carolina, our group. And we had in our renovation budget, we'd already planned to completely, change out all the lighting.
Yeah.
And then one of the things we weren't really considering doing is like the shower heads and stuff. And so the actual company, I can't remember if it was the power or the water company. I'm assuming it's probably the water company, but nope, it was the power company. The power company came in and basically gave us for free 130 shower heads for our complex.
Wow.
And yeah, they basically just shipped them to us and we go in there and replace them. And I guess it just helps them. They have credits and grants and stuff like that for it, but they gave it to us. And I don't know if there's like requirements just for like minimum number of units or anything, but it'd be worth a phone call to have them come in. And they basically come in, do an inspection of the area, see if they can reduce some of the efficiency, reduce the cost and increase the efficiency of the units. And if they can, then they'll provide that kind of stuff for you.
Wow. That's crazy. Yeah. I've never heard of that, but we had to replace, like there was no floodlight. Like there's a parking lot that surrounds the building as like another U. And I mean, there was no floodlighting. I mean, there was bars on the windows when we bought the place too. So all of that bar removal, people had security doors on their doors, et cetera, et cetera. So we actually built a fence around the property, installed floodlights, installed fake security cameras, which I don't know if they help or not, but kind of lit the place up and made it safe that people felt like they were safe walking from their car to their unit. And then also we put in some really nice exterior units, like right next to the door of the unit, right? So you have the door and then right next to it, we have the little exterior lights so people can see their keys and stuff like that. And then in other lighting, it's a U-shaped building again. So right in that courtyard area, we're also going to string lights across the top in like a Z formation as well.
What are the current rents going for prior to you acquiring it?
Prior to me acquiring it, the rents were anywhere from $475 all the way up to $625. Average being $550.
Okay. And what are you projecting to get it to?
We projected to increase the rents to $725. With the first two units, we tested going a little bit higher end, bought stainless steel appliances, granite countertops. We were able to, instead of getting $7 for an extra $2,000, increase the unit to a little bit higher end. We were able to get the rents from $725 to $850.
Wow.
Yeah. So
that's great.
Really, yeah. So net, it would be anywhere from $550 per unit all the way up to $850 per unit. So 50%.
So you did that for your first two. Are you in the process of doing more of them like that now that you're able to achieve that?
Yeah, we're going to keep on going like that because we got so many applicants for those first two units that now if I just finish the other units, I'm just going to call those applicants. So I have a backlog of people who now want to move in to that unit style for that unit price. So I might as well spend the extra money. I mean, if you look at the return basis for an extra from $725 to $8, for an extra $125 a month for just $1,000 or $2,000, it's worth it.
Sure, absolutely.
Get your money back first year. Yeah.
Yeah, for sure. So are you doing anything like smart home technology or anything like that?
No, I am not. And I haven't thought about it either.
One idea for you on that is and I know this is kind of a smaller, it's kind of a smaller units, mix,
Yeah.
like 120. So you're not gonna be able to get a company to come in and like, put a full program in place. But one of the other things you can do is have it as an option for your tenants
Yeah.
to get it installed before they move in. And we're achieving like a $50 rent bump. Not everybody's getting it, but for an extra $50 a month. So you can go and buy one at, Home Depot or Lowe's or whatever and put it into the unit, and they can connect it up to their smartphone, and it helps
Is
with
that,
the whole.
are you guys getting like Nest or something? Like something like that?
We actually have a third-party company called Zego that we use, and they basically provide the technology, and we can actually hooks into our property management software, and
Oh,
as when a
wow.
tenant leaves, it manages to make sure that the temperatures drop down and it's not,
Oh, wow.
the air is not just blowing and no one's in there.
Yeah.
So
Yeah. Yeah. Okay, cool. Yeah, no, I'll definitely look into it. Yeah. I mean, for 20 units, we probably won't be able, probably have to pay it out of pocket, but, and do it ourselves and set it up ourselves. But yeah, definitely something to look for. I'm looking at some bigger buildings now. So definitely something to think
yeah.
about.
Well, even on that 20 unit, those units, you can get them at the store for what, 150, $200
Yeah.
and
Yeah. Yeah.
$50 rent premium. That's pretty sweet.
Yeah. That's
So,
true.
and you might want to throw in there some like electronic door locks or something like that. Who knows? But just do some pricing on that. I think that would
Oh,
be
yeah.
great, especially with the kind of asset that you're bringing it up to. Those would be
Yeah.
some additional like kind of like cool things that they might want to add into it. We just do it as an option so that if they don't want it, I don't want to like lose the resident because they didn't want to pay an extra $50 for it or something.
$50 a month that you're charging for that option.
Yeah.
Oh, wow.
Yeah. I would
Yeah. That's
just throw
interesting.
it out there with your new residents, just see if
Yeah,
they're
because
interested.
there's no
If they're
risk to
not,
me too.
I
Hey,
mean,
we'll give you a Nest and an electric door lock and with a code on it for $50 for $900. Yeah, sure. Okay.
yeah.
Yeah, I like that.
It's
No
pretty
brainer.
nice little bump. So
Yeah,
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 and you pretty much pay for it in the next couple of months, and then
yeah.
your next tenant that comes in there,
Gets it
it's
for free.
just all gravy.
Yeah, yeah. I like
So
that.
yeah. Anyway, so that was just a little idea there. So how did you end up financing this deal? Obviously, you went through some. Was it a local bank or was it like a small balance?
It was no, not small balance because the loan was going to be too small. So the
That's
loan
right, because
was
it had to be at least $1 million, I think.
yeah, yeah. So I tried that. They told me the first phone call, hey, your deal's too small.
Yeah.
Then I was like, okay, well, what am I going to do? I didn't have any lender really lined up. I started working with one of the big banks, and they kind of backed out last minute. They told me that they were still going to be able to finance it, but we had like 10 days left in our due diligence period, and then that bank backed out and they said, oh, your loan's too small and the interest rates, blah, 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 blah. Luckily, I had some backup lenders. What we ended up using was a local company here in Los Angeles who invests in all 50 states. They are an asset-based lender. So because the other thing too about us is like me and my dad and my mom all had our own companies, and our own businesses. So our tax returns and W-2s don't look good at all because we just write off everything, and everything we try to pay as little amount of taxes. So getting financing is a struggle. So for us, really finding an asset-based lender who is just going to lend on the property, on the asset, was very important to us. Now, if we had all full-time jobs, it would have been fine. We could have went and used one of those big banks or something like that. But that's kind of what made it interesting for us. So I found an asset-based lender in LA. They lend in all 50 states. They have higher interest rates, but you can buy them down. So like the interest rate they gave us was 7.5%. I bought it down to 6.5% by paying 2 points. But if you do the math, it made more sense to do it like that. But I ended up getting 60% LTV, 6.5% interest on a 30-year term. So that's the lender that I kind of was forced to use. And that was bought in December. And hopefully by the end of this year, I'll be able to go back to Freddie Mac and do the small balance loan and then pay off that lender, draw out my interest rate from 6.5 to 4.8 and make up that difference.
That's exactly what I was getting ready to say. So that's a great idea to refi into one of those permanent agency debts, because by that time you'll be well above the $1 million balance.
Yeah. Yeah. The building now, once we get all those rents up, we're probably like halfway. The building will be worth on paper like around $2.1 million. So yeah, we'll be well above the $1 million mark.
Yeah. That'll be great. That's exciting because
Yeah.
you'll be able to pull out pretty much all of your initial capital and then some.
Yeah. And then be able to, use that cash for another deal too. Just in 1 year, hopefully in just 12 months. Cause Freddie Mac has a minimum you have to be on title for 12 months or something like that. So as soon as we hit that 12-month mark, which is going to be in December, the lender said they're going to start talking to me in, October or November to get everything planned up so that in December it can be an easy just loan doc and funding to get it done.
Yeah. Yeah. That'll be great.
Yeah.
We've done some small balance loans with Freddie Mac, and they're pretty easy to work with. Lots of paperwork, but they're pretty easy to work with.
Yeah. And good interest rate, great terms, especially right now.
Well, yeah, right now it's phenomenal. I mean, we're seeing 4.1, 4.2. I mean, on the smaller ones, it's more like 4.4, 4.5 on the terms. But I mean, it's still a great option to be able to consider for sure.
Yep, agreed.
So 6.5%. You probably with 60% LTV were bringing in more money than you really wanted to on this deal, right?
Yeah, they told us at the beginning it was 70% LTV, but then the more financials that they got, the lower the LTV went. So, but then at the end of the day too, we're like, me and my dad would just look at each other and look at the numbers. Okay, we're really gonna back out of this deal because we need to put an extra $100,000 in. The returns, because the cash flow was so good on the building, it would affect our returns a little bit, maybe 1% IRR or 2% IRR, but I mean, at the end of the day, it was like we really wanted to do this deal. We really liked the numbers of the deal, and we weren't going to just back out of it because we needed to put an extra $100,000 into the property. We just looked at it positively, and we make more cash flow now.
So when you were doing your IRR projections, how many years were you projecting the hold period?
5 years with a sale in year 5 at a cap rate 1% higher than acquisition cap.
Okay. And what cap rate did you acquire it at?
I think it was like 7.5, and then maybe not a full, I think, and then it's selling it at an 8 cap. So I rounded up or something like that. And that's, in the IRR, I don't put in a refinance number, but if I put that in year 2, I mean, the numbers would have been ridiculous.
So what did your IRR calculation come up to without the refi?
Yeah. So without the refi, when I first ran the numbers, it was 15, but that was with rents being at 725.
Mm-hmm.
We're able to get it to 850. It adds 10. So 25% IRR is now what the building is going to be operating at for the next 5 years.
Wow. That is phenomenal, man. Great find there. Great find. I'm sure your parents are very happy with you.
Oh yeah.
Now, obviously these are your parents, but I'm sure there was some sort of deal structure that you did with your parents, that you found this deal, you put it together, things like that. So how did you structure this deal with your investors?
Good question. I didn't. No, I didn't get anything. I mean, I'm paid a salary from the company, which is, I guess, different from this, but no, I didn't take anything from it. I'm still managing the whole renovation. My goal is for my parents to retire. So this just gets me one step closer to that goal. My dad actually just sent an email to his company where he works right now as an employee, and he's going to quit in the next couple of months. So this building made that goal a little bit more possible. So no, there was no deal between me and my parents. I just gave it to them, and they're taking all the risk, doing all the putting all the money up front. So that's great for them. It allows them to live a little bit more relaxed, and they did sell their house to buy the damn thing. So props to them for doing it. There is a little interesting thing that I did do though, because the listing agent did both sides of the deal. So my buyer's agent, who really helps me find and buy all of my single family homes or commercial buildings, and really is my boots on the ground guy when it comes to managing the renovation, finding the contractors. I just felt that it was not fair for him to not be paid through the property. He should be getting a buyer's commission. He was handling all the contractors' bids, collecting all that stuff. So what I did is, that guy also works for that property management company as well. So I gave him an equity stake in the apartment building. I gave him So he was supposed to get like 3% as a buyer's agent. I gave him 3% of the property, of the net cash flows of the property. So 3% ownership in the property. And he's tied to that property management company. He's also managing a lot of the renovations and making decisions based on units and what we should do and what we should renovate. So that's something interesting that I did, and always just take care of the people who are managing those deals on the ground, whether you're going to pay them out of pocket or if you're going to, give them equity in your deal. But trust me, when shit hits the fan, then they can go and manage and take care of the issues that do come up, because now they feel like they're part of the building, right? And they're going to do what's right for the longevity of the business that you've created or of the investment.
So what other issues might have come up during the entire process that we maybe have not talked about yet? Anything else you can think of?
Yeah, the contractors. So my contractors for like 90% of the stuff were great because they're guys that I use every day for my single family home business in those markets. So the general contractor is terrific. It's when you got into the special stuff. So like the ironwork guy, the first one had like a triple bypass surgery. So he was out of work for like 3 months.
That's a good excuse.
Yeah, I think he had a great excuse. His wife called me because I kept calling him after we closed, and she's like, "Hey, John's in the triple bypass. He actually can't work." I was like, "Holy, no need to apologize. Take your time." I was like, "Oh God." Found another guy. Guy installed a new staircase. Everything was, I mean, I don't even know if he read the code before installing the new staircase. So I had him do that one little job, which took 3 months to build a staircase, which should have taken a week or 2 weeks, let's say. And it was, sure, there was bad weather and all that kind of stuff, but still it wasn't good work at the end of the day even. So then I finally found a third guy who I gave a deposit to 3 weeks ago, because I still have to do all the handrails. I want that staircase fixed. And then I want to replace all that tin under the landing, which is completely rusted out and looks like it's going to collapse. So there's still work to be done on the iron work side. So this third contractor, I gave him the bid 2 weeks ago. I mean, I gave him the down payment 2 weeks ago. I'm looking to see. And he was supposed to do it 2 weeks ago. He said he had everything ready to go. All his guys were good to go. And I still haven't. It's been 2 weeks. I've been following up with him every 3 days. He said last week he was in jury duty, and this week I don't know what his excuse is going to be. But managing those special people who you haven't, not special, the special work people, the iron guys, or sometimes it's your HVAC guy or electrical person. It's just those people have been very hard to manage. My other contractors, the GCs, are pretty good at, if they trust you and they know you and you're paying them on time, they like to go and do the work. But these other guys have just been terrible to deal with, and hopefully we'll get this work finally done. But yeah, it's been months, and we've made very little progress as to what we've been trying to do on the iron side.
Well, I have actually not done any work with any iron people, but I can definitely tell you that it does the same kind of stuff happens in the other spaces, like you said, like the HVAC and electrical and plumbing, and even if you have a pool, the pool people and all that kind of stuff.
Yeah, exactly. Yeah, it's always those special trades that there's very few of them too. Like imagine how many ironwork guys are there. Like the big guys are way too big, then the small guys are way too small. Their mom is helping them, collect all the steel and stuff like that. So there's very little in between guys. And then the guys who are good are busy. So because there's tons of, people, one staircase can be a 2-week job or something like that. So it takes a lot of time to do these things. And yeah, it's been hard to find those special guys.
So I have 2 final questions for you that I ask every guest. The first one is, what did you find during the entire process that was actually easier than you had expected?
Easier than I expected. I think what was easier than I expected was actually collecting all of the bids and doing the initial inspection and walkthrough. If you have a good inspector, that thing can be a breeze. You can knock it out. Just 20 units, but we knocked it out in one day. We had like all the reports ready to go. We were able to check all the major systems all in one day. I thought I would have to like extend my flight or something like that. But if you have a good inspector who you know and trust, who really knows what they're doing and has done the same size building before, then it makes that job a walk in the park. And so I think that was probably the easiest part of the whole process was doing that initial inspection, collecting all the bids, and then kind of just summing them up and then going back to the seller for a discount.
So then the last question is kind of the opposite of that is what did you find that ended up being a lot harder than you had originally expected?
Yeah, well, I just talked about that. But yeah, finding those specialty contractors was a real pain for me. And I'm still going through the process, so I'll let you know how it goes. But yeah, I would have those people really lined up and have a couple of, if you're doing an apartment building, have a couple of those people lined up because you never know when people are going to have triple bypass surgery or complain about the weather and not show up.
Sure. Well, I'd love to have you back on maybe this time next year when you've now gone through and actually hopefully got it into that permanent agency debt. So we can kind of see, what you guys have been able to do from, one, hopefully by then you'll have the metal work done, right?
Mm-hmm. I certainly hope so.
Hopefully. And so we'll definitely, I'd love to have you back on to be able to kind of recap that and kind of see how you're doing with that. But I do want to, thank you very much for your time, for coming onto the podcast and sharing this information about this asset. How can the listeners reach out to you if they have further questions for you, they want to connect with you or, follow you more?
Sure. Yeah. Thanks. So my website for the turnkey business is martelturnkey.com. I'm big on Instagram, so you can find me on, I'm on Instagram a lot. So you can find me on Instagram at Martel Antoine, Martel Antoine. My email address, if anybody wants to email me or want to talk about the building, talk about my markets. I'm in a couple of different markets, so I know them pretty well. All in the Midwest and Northeast. My email is Antoine, Antoine, at martelturnkey.com. And thanks again for having me on, Dan. It was great being here.
Now, one last question here too is I was just thinking about this. Are you moving more into the multifamily space now as well? Going to start maybe doing some syndications?
Yeah, we're trying to do our first syndication this year. So we're looking for a bigger building that we can do a syndication where it makes sense to bring in financial partners. And yeah, my goal this year is to do 100 units of apartment buildings, and do 100 units this year.
Units, yeah.
Yeah. 100 apartment units this year and do a syndication with them. Yep.
That's awesome. Well, I'm looking forward to continue to follow you and, be sure to reach out to me once you have that next asset under contract or not under contract, once you close on it. So I'd love to have you back on and talk about that too. So
yeah, I'd love to.
Unique strategies and a great head on your shoulder as well.
Awesome. Thank you so much, Dan.
All right. Thanks.